So I think the title of my conversation today was 4 reasons that you should consider an LLC for your real estate investment. And ultimately, there's no right or wrong answer as to whether or not you should have an LLC for your real estate investment. It all depends on what the scenario is per individual, per company, but ultimately you should be aware of what the benefits are as well as what the cons are when it comes to establishing an LLC for your rental property. And the biggest issue at hand, which is why you should be considering an LLC, if anything, is the fact that you're going to be in a position where you could provide a legal separation from your personal assets and your real estate investment asset. And then secondly, you're going to have a separation of accounting, a separation of funds to prevent you from commingling your personal assets with your real estate investment assets. So those are the 2 biggest issues that we identify and look at to assess whether or not it makes sense for us to benefit from creating an LLC. So I mentioned that there's going to be 4 big issues or 4 reasons that you should be considering the LLC for your scenario. And the first option is that it is going to limit your personal liability. So when you have an LLC, you're typically creating a separate business entity structure, and that separate business entity structure is going to have assets. And ideally, as a real estate investor of rental property, if you're in a position where you can actually create this LLC and the LLC owns the asset itself, then ultimately you're creating a separation from your personal assets, from your other business assets, from that of the rental property per se. And ultimately, when it comes to creating the LLC, you're not necessarily in a position where you're taking advantages of specific tax strategies or benefiting from any specific tax strategy. In actuality, that's a myth. Unfortunately, you're not benefiting at all with regards to your taxes from the mere fact of creating an LLC. However, what you are benefiting from is the fact that you now are limiting the liability of a particular asset to the company's assets that it owns. And ultimately, if you do have a rental property or an investment and you have that rental property owned by an LLC, the assets of that LLC will be all of the assets ultimately that is generated from that particular investment. So that's important because, again, if you have multiple assets at the personal level, as well as with other business activity, the actual liability will be confined to that one particular asset per se. So that's the real benefit of creating an LLC. And again, it's not going to necessarily give you any benefits on your taxes. It's just making sure that you're protecting yourself from any legal liability if there were to be any issues to arise in the event of a potential lawsuit. Point number 2, the second reason why you should be considering an LLC for your real estate investment or rental property is the fact that you're going to be able to separate your activity of that rental from your personal activity, as well as, again, from other business activity. And similar to separating the LLC's activity or the rental property from your personal and business, if you have multiple assets or multiple rentals, the recommendation is that you do not commingle or lump all of those assets into one LLC, but rather you should be separating those assets and having them sit in their own LLCs. And the reason this is because it goes back to separating your personal assets from your business assets. If you have multiple investments, multiple assets, multiple properties, God forbid if one tenant or if an individual decides to sue due to negligence or due to whatever the case may be on a particular property, if they were to sue you as the owner or the business as the owner, if that business has all of its assets sitting in one particular LLC, then all of those assets are up for grabs, and that is opening up exposure for the entire portfolio per se. So rather than have that be a situation, what most individuals will do is they will then establish a separate LLC for individual investments or individual properties. So that's the second point. Now let's talk about the third point. The third point is that you're in a situation where you're now able to easily identify and easily separate your business activity when it comes to your accounting, and when it comes to looking at your numbers, and when it comes to preparing your tax filings. If you're in a situation where you have a separate entity or a separate LLC structured per property, and again, this is separate from your personal, this is separate from any other business activity, this is separate from any other investment activity. If you actually have these dedicated to their own separate LLCs, then it makes it a lot easier for you now to go out and establish a separate bank account with that particular LLC name, so that any activity that's generated from that LLC, whether it be revenue or expenses, will be confined to that one bank account. And if you can confine everything to a standard unified bank account for the LLC, again, it just makes it a lot easier to identify the activity that's going on with the property. And then more importantly, it's going to make it easier for you when it comes time to preparing your financial statements, preparing your tax filings. Ultimately, if you're not in a situation where you're separating and you have separate accounting going on, then you're in a place where you're commingling and you're combining multiple business activities, multiple investments, all in one particular account. And by no means is it impossible for you to obviously get down to what relates to the specific property that you need to identify, but it just makes it more difficult and more complicated and cumbersome for you to go through that level of detail, especially if you're in a situation where you're working with another professional to assist you with the preparation of specific forms and filings. So that's the third situation that you will benefit from in the event you do identify an LLC as an opportunity. And then the fourth situation is that once you do establish an LLC, if you do consider establishing an LLC, the benefit of this is that you will treat this as a pass-through entity. And what this means is, even though you are establishing a completely separate business entity and you have separation from your personal and business, you do not necessarily have to go out and file a separate tax return for this LLC. Unlike the C corporation, S corporation, where you do have to file a separate tax return, with a LLC, it is considered a pass-through entity. The only situation in which you will have to do additional tax filings and tax preps is if you have individuals that have a partnership and it's more than one individual that owns the LLC. So if you have two or more individuals owning the LLC, then you then have to go out and file a partnership tax return, which is an additional step that is not required for someone that's a single member owner of an LLC. As a single member owner of an LLC, you will obviously take the results of the activity from the business, and then you will report that by way of your Schedule C on your personal tax return. Another benefit is the fact that you do not have to get taxed at the corporate level. You're not being double taxed. You're just, again, passing the results of the business activity down to your personal self. So those are four benefits, for reasons why you should consider an LLC if you do have rental properties. It's going to limit your personal liability. It's going to keep your rental properties separate from the other rental properties if you have multiple properties. It's also going to allow you to easily separate your personal from your business activity. And then in addition, it's a pass-through entity where you will ultimately pass the activity down to your personal tax return, and you can avoid double taxation. So now that you guys kind of understand the importance of creating the LLCs, the question that I have now is, do you really need to create an LLC if you have rental properties? And I gave you some benefits. And to answer that question, no, you do not have to create an LLC if you have rental properties. However, if you're looking to, again, have a separation from having all of your personal assets on the hook and exposed to liabilities by not having the LLC, if that's a concern of yours, then you certainly should consider an LLC. If you're not in a situation where you are exposed or have a material exposure or material personal assets, other businesses per se, it may be a situation where you can certainly have your rental properties in your personal name. But ultimately, the LLC is not giving you real tax advantages, but rather it's going to give you that separation of exposure and it's going to limit your liability. And this is important because if you have multiple tenants and you're even in situations where you have possibly short-term rentals, you're dealing with multiple clients, multiple tenants on a regular basis, and there's the potential that anything could happen. They could maybe slip on the step, fall in the shower, and even though it may not necessarily be your fault as the owner, you are liable if they injure themselves on your property and they could prove it that it was due to your negligence. And if that's the case, then certainly you want to make sure that you have the proper protections in place, such as the LLC. Now, who should be creating an LLC? You can create the LLC as an individual single member owner, or you can create the LLC as a partnership, multiple owners. So if you're an individual, I oftentimes will see individuals have their investments in their personal name, which I'll explain to you why that's a good situation and then the benefits and cons of that. But then you also have individuals that are multiple owners. They have partnerships, they have different REITs, they have syndications. Those are the individuals that most certainly should be considering an LLC. And before I get into those individuals, let's talk about the individual first. So as an individual, really, if it's just you by yourself and you're investing in the property yourself, you can certainly go out, get the name of the asset in your personal, or get the asset in your personal name with the lender, if you obviously are financing, or you can get the asset in the LLC name. And if you're an individual pursuing this particular investment and it's in your personal name, ultimately, what that's going to allow you to do is it's going to allow you to go through the financing process a lot easier, a lot smoother, because you as the individual, you are the one that has the name on the title of the real estate investment. It's not the LLC, it's your personal name, and your personal name has more of a track record, it has more history, it has more verifiable income, it has a credit score. So it makes it easier for you to actually go out and obtain that asset in your personal name. However, if you actually were to consider primarily making sure that you have separation from your personal assets and business or legal purposes, then you want to consider the LLC as an individual. And unfortunately, most individuals that start out with this particular route or process, they don't have a huge history built up with their LLC. They don't have a lot of credit to really back the case that they can actually qualify for the loan on its own. So what happens is oftentimes the LLC can certainly apply for the loan in its name, but there's going to have to be a guarantor on the note with the lending company, and the guarantor is going to be you, the individual. And then secondly, because you're getting it in the LLC name, oftentimes your interest rates will be more expensive. There may be additional fees that may not necessarily be associated with securing the investment as the individual. So there's certainly some considerations that you want to have, but ultimately, if it's a matter of really prioritizing the separation of business and the separation of personal, the LLC is a route that is highly, highly recommended and a good option to consider. Now, I talked about the individual. Let's talk about the situation in which you have partners and multiple individuals involved in the aspect of this investment property. So when you have multiple individuals involved, oftentimes this is involving not one, but two or more individuals that are coming together. They're pulling their money together to obviously make this investment come to life or make this business come to life. And in doing so, the recommendation is obviously when you create any business to have an operating agreement, but more important than ever, when you have two or more individuals involved in the mix, you certainly want to make sure that you have that structure in place, because that's going to outline and describe what the ability of each owner is with regards to their compensation, revenue, expenses, profit share, what can happen in the business, what cannot happen in the business. All of this is a huge, huge importance when you're dealing with multiple individuals as opposed to just one owner. So that's the first thing that needs to occur when you're dealing with multiple individuals that own a particular investment property. And this is important because once you get that established, then that's going to be a form that's included with the creation of the LLC. And as I mentioned previously, when it comes to multiple members owning an LLC, those individuals now have to file a partnership tax return, which is now an additional form that isn't necessarily required for the one individual that owns a LLC. Another benefit for the multiple member owner of an LLC is the fact that they now have the ability to receive contributions or have foreign investors to now contribute to their funds. So if they're looking to obviously expand or open up opportunities to expand and have different owners, they don't necessarily have to stay within the states. They can actually go outside of the states, and those individuals can be owners. So that's a huge benefit of an LLC for multiple members. All right, so I talked about who should create the LLC. Obviously, you can be an individual, or if you're an individual that wants to really protect your personal assets against any liability against the business, that's a huge consideration for you. But high recommendation is that if you have multiple members that are part of the real estate investment, then they for sure should be considered an LLC. So those are the people that should create the LLC. When should you create the LLC? So this is a very common situation that I see a lot with some of my clients. They oftentimes, and because it is easier for you to acquire a home in your individual name, as I mentioned earlier, a lot of investors don't start off with acquiring properties in LLCs. What they do is they first acquire the properties in their personal name, and then at some point later, they decide that they want to transition the ownership from their personal name to an LLC. And there's two ways that you can go about creating an LLC for your real estate investment. You either purchase the property on your own with your own personal name, and then you transfer the title over to the LLC, or you outright from the beginning purchase the asset in the LLC name. So those are the two options that are on the table for actually getting your rental property or investment in the LLC. Let's talk about what that process looks like for the individual that purchased that property in their personal name and now they want to switch it over to the LLC. So if an individual, again, purchased the property independently from any business or LLC, they obviously got it on their own. They qualified for it with their own name, their own credit score, their own verification. And it obviously made it easier for them to do so because they have more of a history than an LLC in most cases. However, once this individual decides that, hey, I want to actually get going with a business and start to acquire more and make sure that I have separation from personal and business, now I want to make it an LLC. You can't necessarily just go out and create an LLC and go to your Secretary of State and create this LLC and now say that the LLC owns this house. You actually have to follow a specific process in order to make sure that this is done legally and done the correct way. And the correct way to do this is that you first have to go back to your lender and communicate to them that you are interested in now transitioning the title from your personal name to your LLC. And there's a couple of things that you need to be aware of when this occurs. In order to do this, first and foremost, you need to understand that the lending institution or bank will either accept or reject. And if they were to accept it, there may be some conditions in which they allow you to do this. They may actually require that you completely resolve any outstanding debts or balances and sell the asset to the LLC. And in doing so, obviously that may result in additional closing costs, that may result in a taxable impact, because if you were to sell from the personal activity, or if the personal asset, you being the person, to your LLC, you potentially may have a gain from whatever the value of the home is at that time from when you purchased it. And if you have a gain now, you're looking at capital gains. So that could be one scenario that can occur if you do have the asset in your personal name versus the LLC from the beginning. Another scenario is that they may say, hey, yeah, we'll allow you to actually transition it to the LLC. However, because this is now owned by the LLC and not you individually, we are now going to reassess your terms, and we may now reassess your interest rate. We may now reassess some of the language in the agreement. So one of the things that you want to do when considering this is asking some specific questions about, hey, what is the process of me transitioning my investment or my real estate from my personal name to the LLC? Those are some basic, simple questions, and then you can get a lot of information in terms of what's allowed and what's not allowed. And this is really, really important because, again, if you're able to now get this LLC in your business name versus you as an individual, now you have a situation in which you obviously are creating that legal protection from your personal to your business, and any assets that that business now has access to, that's the extent and the length of reach that any legal potential lawsuit can come after. They can't come after your personal. All right, so I talked about the individual that actually has the property in their personal name versus if they purchased it outright in the LLC. Let's talk about purchasing the property in the LLC name from the beginning versus transitioning from personal to LLC. So to actually purchase the property in your LLC from the beginning, it goes through a similar process as if you were the individual. However, there's going to be more loops and processes that you actually need to jump through and follow, because again, you as an LLC isn't as mature. It doesn't have a lot of history in most cases as you the individual. So what happens is oftentimes the LLC may qualify to have that home in its name, however, or that investment in its name. However, this may come with some additional fees. It may come with higher interest rate. It may come with the fact that you now have to be the personal guarantor on the loan. And unfortunately, because that is the case, if anything happens where the LLC couldn't make the payment or defaults on the loan, you now are ultimately liable as an individual. So that's one catch that needs to be considered and that you need to be aware of when getting the LLC in the business name. But ultimately, if all goes well as planned, at the end of the day, you're ultimately creating this separation of liability from your personal to your business. One key thing that I want to share when it comes to the LLC that I think a lot of investors miss, especially if they started out with the individual investment in their personal name. Once you have the LLC and you created the LLC and the title is now switched over to the LLC versus the individual personal name, that LLC now owns that asset. It owns the investment property. And because it owns the investment property, if you have tenants and those tenants were previously engaged under a lease agreement or a contract with you, the individual, you now have to redo those agreements so that the agreements are in the name of the business versus the individual. And this is very, very important because now the LLC owns the home, not you, the individual. And if there's any issues, legal liability issues that come up, the contract is not in the name of the LLC, it's in the name of you because that's what you started with. However, we need to update that and renew that. So this is something that needs to be reminded and something that needs to be that you need to be aware of when it comes to these changes of who owns what. So as I wrap up, I just want to share a couple more key things that I think is really important. If you transfer your title to your LLC, but you actually have a mortgage that's in your individual name, then the name of the mortgage note will not necessarily match that of the property deed. And this is likely going to compromise the foreclosure rights with the lender. So this is why it's really recommended that you actually contact the lender to find out if they allow you to do any transfer of title with your LLC before you actually go ahead with the paperwork and the process of completing that process. In addition, if your lender actually allows you to transfer your title, even though you actually got the loan in your personal name, you have to actually ask specific questions about, hey, what are the conditions? And make sure that you're very clear on getting that question answered thoroughly, because there's certainly going to be some conditions that are allowed. And again, they may reject or approve. And if they approve you, there's certainly going to be some conditions that they require. So each lender has their different requirements, but just be mindful of that question. And then this is a very, very important note that I also want to share. When you transfer your ownership to your LLC, when it was previously in your individual name, this oftentimes it may potentially trigger a tax consequence, because again, when you do that transfer, sometimes there may be a sale that may be required in order for you to do this. And if you actually have to commence with a sale from your personal to the LLC, chances are your property has approved in the value, appreciated in value, and you're now going to have a higher value versus the time when you purchased. And if that occurs, you now have a gain to recognize. So just be mindful of that potential. And this is obviously going to be uncovered as a potential case or scenario when you ask your lender, hey, what are the conditions involved if I were to switch over to an LLC from my personal? So one more thing that I want to do before I wrap it up, let's talk about the cost. When it comes to the cost of an LLC, it sounds all good. You're obviously in a position where you can protect yourself legally, but at the end of the day, it costs. The cost is that you now have to go out and file these forms. You need to actually get the documentation set up appropriately and correctly. In addition, once you get the LLC established, there's ongoing requirements that you need to meet with regards to staying compliant. You have to actually complete specific forms for your tax compliance. Each LLC is responsible for reporting information on a tax return, and also filing with the franchise tax board. So depending on your state, you may be on the hook for an annual tax with your franchise tax board, anywhere from maybe $250 to $800. And here in California, that actual fee is $800. So each LLC is on the hook for that. So this is something that needs to be reminded and that you need to be aware of, so that you don't go into the situation blindly. In addition, when you do create these entities, be aware that when you're working with professionals that are assisting you with making sure that you get these forms completed and filed properly, these are going to be additional costs that didn't exist when you were just a regular individual filing your regular tax return. Now that you have LLCs, these are additional forms. They're more complicated in most instances than a traditional individual tax return. And as a result, it's going to obviously increase your fees. So keep this in mind when establishing LLCs, and this can certainly add up and increase in prices when you're looking at adding multiple LLCs and multiple layers. But with all of that said, despite the additional work and the cost, when you have an LLC in the name, or when you have an LLC and it actually is the owner of your real estate properties that are investment properties, it's definitely going to provide you a huge relief of peace, knowing that you don't have your personal assets commingled or on the line because of your business activity. And ultimately, it is a cost, but it's worth it, in my opinion. And not everyone necessarily needs to go out and get an LLC, but certainly if you're an individual that has multiple assets, many assets outside of this investment, and you have an investment property that you're actually renting out, certainly consider an LLC. And then most certainly, if you have partnerships and individuals that own the specific investment property together, those are the individuals that certainly should be considering the LLC route. So That's my time for today, y'all. I hope this was very